Ladies and gentlemen, welcome back to the channel. AMC stock is soaring today, up 4.61% heading into their earnings tomorrow in after hours. Oh boy, things are getting exciting. You are right here almost at your 50-day moving average. 50-day moving average at $4.92 per share. AMC stock is currently at $4.64 per share. My call trade on AMC is starting to work. The position is up 30 or so percent. And I think the real question again, do we get the commitment that we're not going to see dilution, or do we not? If we don't, then this rally is short-lived. If we do, then AMC stock could probably go through a short squeeze-like event, go up a couple hundred percentage points. That would be my estimates. Now, today you're actually seeing some really good news for AMC and for your small cap stocks. Take a look at this for just a moment. The Russell 2000 is up 1.37%. Up 1.37%. That's insane. The NASDAQ is up 0.18%. The S&P is down 0.06%. And the Dow Jones Industrial Average is down almost 0.5%. So what's going on today, and why is the Russell 2000 outperforming? Well there, my friends, ladies and gentlemen. Yeah, not the greatest news, actually. We had durable goods orders month over month that came in today, 8:30 in the morning. It came in at negative 6.1%. Last month was revised down to negative 0.3%. And the estimate was negative 4.5%. So this was worse than expected, really showing that the Fed cannot afford to wait to start cutting rates. This increases the odds that we will get rate cuts coming sooner. And just keep in mind, I don't think this was good news, right? Ultimately, bad economic data, in my opinion, is bad news, right? Now, whether or not equities take this as good news on a day-by-day basis, or certain sectors, do well on this news, that's a different story. But this is not good news, okay? This really shows we're heading into some kind of slowdown or recessionary kind of event. Take a look at this. What the heck? This is by far the worst number you have seen in a very long time, but get it, right? Anytime you have seen a really bad number, you've had a strong number the month before. So back here, right? You had a big green, big blue number here, 4.3%. Next month, you were down 5.6%. On a month-over-month basis, that's okay, because that's not a huge kind of difference there, right? Same back here. Before October of 2023, you were 4% positive. Next month, you were negative 5.1%. You were just giving back last month's gains, right? Back here was a pretty good report, 5.4%, and then next month negative 0.3%, right? But yeah, this one where you were negative 0.3% last month, or December, and then January you were negative 6.1%. That is not good. Okay, I'm not going to sugarcoat that for you. Whether small caps take that as good news or not, that's another story, but that is not good for the overall state of the economy. And I do think this can cause more downside for our markets, especially as we get into the data that will come later into this week. Let's be honest with ourselves. The markets right now have 100% unequivocally priced in a soft landing. If it looks like we may not get a soft landing after all, if it looks like there's a chance of a recession, oh boy, yeah, we have problems on our hands. I want to point out one period of time specifically, well, really two periods of time. Back here, October of 2022. Oh yeah, this was a beautiful time, right? Hopefully you guys remember this. This is probably this period of time will be ingrained in your brain forever, more than likely. Let's pull it up on the weekly chart, just to simplify it a little bit. Back here, This happened because of fears of a recession, not because the Fed was raising rates. When the Fed raises rates, whatever, it doesn't even matter. But when the Fed raises rates, it increases the odds of a recession. And around this time, you were starting to get some bad recessionary data. What happened? Stocks fell big time, okay? If we were to theoretically fall back to the same point that we were in 2022, this is a moment in time we were actually pricing in a recession. That would be a 32% fall from here. I don't think that's going to happen. But yeah, we're head over our heels pricing in good news. Could we fall 20% if it looks like we're heading into a recession when the Fed starts to cut rates? Yeah, the average drop on the S&P is over 20% upon the first Fed rate cut. And I mean, this data that we got today is really, really rough. But it is, helping the markets to maybe get a rate cut sooner. Let's take a look at those actual probabilities. So if we take a look at today, make sure we refresh this to have the most up-to-date data. We're pricing in, let's see, 1, 2, 3. We're still pricing in 3 rate cuts for 2024. Not much has actually moved there. But if we take a look at May, the probability of the rate cut in May is starting to increase a little bit. 77.1% chance of a pause, 22.3% chance of a rate cut. Yesterday, the odds were 18% that we would get a rate cut in May. So that's up, give or take, about 4%. For June, this is when we're expecting the first rate cut now. Odds of a pause dropped from 41.3% yesterday to 38.8% today. Given how bad this data is, I'm honestly surprised that you're not seeing the bonds move bigger. And ultimately, the bond market is what prices Fed policy. And you're just not seeing a big reaction with the bond market, even though this data was like really bad. And, I just can't sugarcoat it for you. If we get more data that, is bad like that, we're going to be in for one hell of a problem in our markets in the not so distant future. Let's just put it like that. But I mean, this is having a positive effect today to small caps. I do think a lot of people have run with the trade idea of buy the catch-up stocks, the stocks that have not done as well. Stocks have kind of been lagging behind, have had a rough start to 2024. A lot of those are interest rate sensitive names. Keep in mind, we went from pricing in 7 rate cuts. Now we're only pricing in 3 rate cuts. That really hasn't affected the headline S&P or the headline, NASDAQ ETF or index, but it has affected broad-based, components of our markets. And we've went from 7 to 3 rate cuts being expected because the data has been so strong. If the data starts to look weaker, like we've seen today, then maybe we do get some rate cuts sooner. And maybe buying those catch-up stocks makes sense as long as we do avoid a recession, or as long as the data does not, get worse or too bad from here. You don't want to see the data too bad. And then you're going to have another 2022 situation on our hands. 2022 stocks didn't necessarily fall because of the Fed raising rates. They fell because when the Fed raises rates, it again increases the odds of a recession. Now, sentiment today in AMC is neutral at 51. Yesterday, it was bearish at 43. Message volume at 41 yesterday. Today is at 53, considered normal. And participation ratio is considered high today at 55. And that's the highest it's been in a while. So that's definitely some good news. More people talking about AMC. I'm not seeing any company-specific news for AMC, so we'll just go ahead and jump in with the Ortex data and take a look at the option activity today from hedge funds and institutions. It is pretty neutral. You've seen one March 1st 450 call and one March 1st 450 put that was bought on AMC. Both of these trades worth about $11,000 a piece. So you have 2 orders totaling $22.76 thousand with a positive order value of 48%. If you take a look at all of the option activity, including retail investors, you have 82.31% volume to the call side, 17.69% volume to the put side. So almost 5 times as many calls being bought than puts. That's a pretty insane ratio. Okay, that's pretty insane. Now, if you take a look at the short interest percentage of free float, you have 12.27%, $136.77 million worth of short positions. Days to cover, 1.86, 30.74 million shares that are currently sold short. Shares out on loan, 32.97 million. Cost to borrow, 1.03%. 50.46% utilization, and a short score of 64.31 out of 100. So again, not the most impressive data here, but definitely not the worst data. If you look at the percent of stocks above their 50-day moving average, today you really are seeing a broadening out of our markets, which is definitely a healthy sign. Percent of stocks above their 50-day moving average at 54.21%. Overall, about 3% of stocks broke above their 50-day moving average today, and that's good. I mean, your 50-day moving average, if still, around 50% of stocks are under that moving average over the last 50 days, that means, the stock's likely just been kind of trending downwards, right? So yeah, we weren't in a great place. We're still not in a fantastic place for the average stock, but today is definitely getting a little bit better. So there is that. We do have some earnings today and after hours as well that you should probably keep in mind. Devon Energy, First Solar, Cava, Rocket Lab, Array Technologies, Axon, Beyond Meat, Lemonade, Splunk, and Virgin Galactics. Keep in mind, for anyone that is thinking about trading Splunk, it's probably not going to move at all on earnings, and you'll see the options are very cheap. You can buy a call that's like right there at the money for like $6 or whatever. That's because Splunk is in the process of getting bought out later in 2024, and unless that deal were to fall apart, you're probably not going to see the stock move. So be careful there. I don't want anyone just to throw away money per se in that trade. But those are the ones we have today and after hours. Tomorrow in pre-market: Baidu, Novavax, Advanced Auto Parts, TJX, ACM Research, Fulgent, TG Therapeutics, and MCore that will be reporting earnings. I do believe today and after hours you will have some other names like Recursion Pharmaceuticals and some smaller guys. I personally own some Recursion. Interesting company. AI pharmaceutical company. So yeah, we'll see what they have to say. The Atlanta Fed GDP Now tracker is not updated, but we will be getting a new number that will be coming out today. Well, actually, it looks like we did get a new number. They actually raised GDP estimates. Sometimes the Atlanta Fed GDP Now tracker is cuckoo for Cocoa Puffs. It raised the estimate from 2.9% to 3.2%. Yeah, you can't make that up. It just makes no sense. So there is that. And again, 10-year treasury yields not doing much of anything. 10 and 2-year yield curve inversion is inverted 41 basis points. That's actually great news, because when you go positive, that's when people tend to kind of freak out about a upcoming recession. So there is that. As far as AMC stock specifically, AMC is up almost 4% today. Again, RSI is at 50.91, pretty much neutral overall. The MACD still very negative, but trending in the right direction. I think really earnings is going to be the big catalyst for AMC, and really probably going to dictate the next couple of weeks or months of how the stock trades. If we get a commitment not to dilute shareholders anymore for, let's say, 3 to 6 months, even 3 months would be cool. 6 months, though, would be preferred. I mean, the stock likely goes much higher, breaks above $10 per share. My personal opinion. If we don't, and it's just kind of a normal earnings, I'm expecting the stock's going to fall back down to its multi-year low at about $3.50 or so. So I am expecting a big move, but it's probably going to take a couple of days for sure. It's probably not going to all happen in one day. I think that would be a bad bet to make. So if you do play options on AMC, get some time. get some time. I think you're better off buying the stock, but if you are going to play options, get some freaking time. That's definitely what I would say there. Nonetheless, guys, that is going to do it for this video. Let me know what you think about this information down below in the comment section. Thanks for watching. Enjoy the rest of your day, and I will see you in the next one.